Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, guys and gals, let's take a look and see what we got going on here for the stock market. This is the E-mini S&P 500 futures. Still have the March 2022 contracts going on. Let's take a look at these cycles. So you can see I still got the 3 cycles on here, starting with the biggest one, which is this orange one. Then we got a little bit of a smaller one here. This is the green one. And then we have the small red ones, okay? Just looking at this, not much has changed from my last week's cycle analysis and just analysis in general on the S&P 500. I mean, this actually is weak, guys. I mean, look at this bounce. It's like nothing. Look at it, came all the way down here. We talked about this last week, all the way down to, I think it was 4101, if I remember right. Yeah, 4101.75, way down there. Okay, which I said last week, that broke that broke the stock market, guys. Here was the previous low way back in January. Okay, which that low broke the previous low from way back here in quad witching. So you can see what's happening here, right? Quad witching was the low, that had beaten out this low and that low. So, you had a positive trend going on, right? This low beat that one beat that one, and then bam. Okay, you can see, like, if we look back over here, way back over here in quad witching, it did beat out this low, right? But it didn't take out the one before it. But now we've got this one that took out this one and that one. And now we got this one that's taken out that one. Okay, and this is a major decline here going on. I mean, you can just tell by the nature of the market. This isn't, last summertime little ups and downs, mostly staying above the 50-day. That's over for now, and maybe over for a long time to come. And the reason why I say this is weak, let me just zoom in a little bit more here. The reason why I say this is weak is, look at this. It didn't even get up to the 50-day moving average. This one farted around sideways and finally got up to it and then got rejected. And this one may still do that. But for right now, this is weak. If this is all it is, look at the top of these candlesticks. They're all just right here. What is that? It's all right around 43.95. That's the top of them. 43.94, 43.95. That's it. They're all just, that's it. That's as far as they've gotten. We'll see if this candlestick right here does, because it just started tonight, a few hours ago. Okay, but for right now, this is weak. And already tracking sideways. So that, to me, is super weak. It's going to have to do a lot of work to get up to here and break through it. Okay? It could still do that. And basically, look at this trend, guys. I mean, this cycle. Look how good this cycle was. All the way down, almost into this cycle. In this cycle, I looked at this the other day. The low was at February 24th. And this cycle low, I think, was the 28th. Yeah, the 28th. Okay? Now remember, there's two non-trading days between 24th and 28th, if I remember right. Okay? So that only missed it by 2 trading days. That's how good that cycle is. Okay? That's amazing. Within 2 trading days, this low and this expected low, and where it actually hit the low, was only two trading days away. Guys, that's good stuff. Okay? So this is the new cycle. Okay, going this way. And we may make a small adjustment to this tiny red cycle here when we see what this does. But for now, I'll keep it the way it is, all right? Because we allow a little wiggle room on either side of the cycle low. That's okay. But right now, if this is all it is, if this thing starts turning and going down, oh my gosh, that's going to be another bombs away. Okay? Another bombs away. So we'll have to keep an eye on this. But for now, this looks weak to me. This whole price action is just garbage. Like nowhere. Deadsville. Okay, and this is what these short-term indicators saying they're already getting kind of peaky. If this flat line across the top, if that's peaks, then you know that's some serious weakness. Now, this middle of this cycle is way over here, which is about March 10th. Okay, so we got some room to go there. 7 calendar days. And we'll see what it does as it approaches the middle of this smaller cycle. Okay, but remember what I said about the third week of March all the way to, whatever the first few days of April. I think that one is, March 29th. This, I think, is the 20th, I remember right. 23rd, and this one's the 20th. 21st. Okay. So I see this area right in here as a potential for some serious price decline. Again, anywhere from the third week of March out to like maybe the first, second, or third of April. Okay, that is a serious time that I'd be keeping a close eye on. With these 3 cycles being so close to each other, I think there's a lot of potential for some big price decline there. The indicators, look at this, MACD below 0, staying below 0. I mean, look at that, just staying below 0, and that's what the short-term indicators saying. Oh, we're peaking. Okay. All right, let's take a look at. By the way, I'm only doing these videos for premium members. I'm not even broadcasting to the general public anymore. So you guys and gals are it. And even if the premium membership dwindles and people leave, and because I'm only doing videos like once a week, I'm still not going to put out to the public. So whoever stays on with the premium membership, you're getting the goods. You're like a small community. That's it. If somebody else stumbles upon an old video out there and wants to join, good for them. Otherwise, oh well. So you're all getting the premium treatment here. Let's look at the monthly. Let me switch over to the monthly drawing set. Look at this, guys. Look at this MACD. It is crossing over on the monthly chart. Oh. Look at these warnings. Look at this divergence, which now I guess we can safely say the divergence is over since prices have officially declined for 2, maybe going on 3 months now. Okay, it's bombs away, man. This is bombs away. I'm telling you. This is going to cross over, and watch out. Okay, look, I said 3,500. Where's this at? 33.69. Still sitting right around 33.60, 33. Okay, that hasn't moved much. I'd still say this line is going to get violated. And I mean violated. 3,500. It's going to blow it. I firmly believe that. I don't think 3,500 is even going to be a little nothing. It's coming down here. It's going to go below this line. How much? I don't know. I said 1,000-point decline from 48.08 from all-time highs. 3,800, guys, is going to be like easy. Easy. Now, will it get below the 50-month? Okay, for right now, it's at 33.69. That's going to change, obviously. It's probably going to come. That monthly is going to start to press down here if this keeps up. Okay, and I think it will keep up, or I should say down. So I think 3,800 is going to be easy peasy, 1, 2, 3 easy. I think it's going to break through, eat pretty easy, which is about right here somewhere. It's going to blow right on through that, probably this year sometime. And then we'll see 3,500. I think it'll get below that too. Maybe later in the year, maybe going into 2023, I don't know. Okay, and then we'll just see what does it do as it approaches the 50-month. It may not go below that. I don't know. We'll see. But I do believe 3,800 is going to be a piece of cake. Okay, and this, I think it was the end of June of this year, if I remember right. Yeah, June 29th. So that hasn't changed for now. This approximate time frame. Again, it can be anywhere from May out to like August. Okay, maybe even longer than that. It could be like May all the way out to like September. All right, so let's go take a look at the weekly. Let me switch over to my weekly drawing chart set. Okay, well, look at this. Last 2 weeks, broken below the 50-week. That is huge. Huge. This one was testing the waters. It's official, man. We are below the 50-week. Look at this. It's official. I'm telling you right now. Look at the 0 on the MACD, the purple line way down there. Not anymore. This is what we call OOJ, but down. OOJ going down. These little indicators, forget about it. They can come up here and do all they want. That MACD is speaking volumes. Look at that. Below the 50 week. I'm telling you right now, for those that like to think of down as bad, I don't think that way, but that's fine for those that think that way, then you're in for a lot of pain. There ain't going to be any all-time highs coming anytime soon, folks. Ain't happening. And if I'm wrong, I'm wrong. But right now, this looks like we're going big time down. All right, May 8th. And this one was August, I think. Yeah, August 28th. Okay, May 8th. Which loosely translates to end of June, but not, I mean, they're not really in sync, you know. And I don't put a lot of credence, I've said this before, in the weekly cycles. So the monthly, the daily and the monthly cycles seems to be much more reliable. Okay. But man, oh man, we are officially below the 50 week, guys. That is a huge sign. Huge. Okay. That's huge. That hasn't happened, and look how far back it's been. That was since the make-believe pandemic. You know, the ones that released the virus on the world. The Bible calls those people destroyers of the earth. Destroyers of nations. Yeah. Plandemic. So that hasn't happened. Last time we were below that was May 18th of 2020. You know, almost 2 years ago. More than a year and a half. Look at that. Violating below the 50 week. That is big event. Huge event. Okay, let's look at the hourly. I'll finish up, then I'm just going to do gold. You won't even need to talk about crude oil. We all know it's well over $100. We know why, too. Okay, all you got to do is look over to Eastern Europe, Western Asia. Okay, we used to, when I was a kid, we called that Euro-Asia. I guess they still do, but Euro-Asia, just take a look at that area. Everybody knows what's going on there. Evil. Murder. Unprovoked war. But I heard Putin took out some virus labs paid for by the Department of Defense with our American dollars over there in the Ukraine. I bet you didn't know about that, did you? Took out the virus labs. The Department of Defense paying for viruses all over the world. It was like dozens and dozens of labs all over the world that the Department of Defense, our Department of Defense, uses our money to pay for dangerous viruses. And then turns a blind eye and says, we didn't know that was going to happen. Plandemic, folks. And it's your hard-earned money making those bad viruses. So, here on the hourly, let me switch to the hourly chart. Yeah, March 3rd, guys, 7 p.m. Texas time. Okay, that's what that is. And I don't know why this changed. I thought I had this set up for the time axis. Let me put this out like way the heck out there. I'll do it like 250 so we can get a big... So I know a lot of you want to look at the hourly chart. Okay, so let's take a look at this together here. We got March 3rd. Yeah, March 3rd, 7 p.m., okay? That's that one right there. This one is March 7th, a little after 4 p.m. Okay, so now you know where that one is right there. This is hourly now. The next one, which is, whenever I highlight this, I really mean the next, right over here, right? Okay, so let me just highlight it down here so everybody knows what I'm talking about. It's March 9th, 2:10 p.m. Okay, so if you want to pause the video and go back and pause the video, you can see where these are coming out at. March 11th, 12:10 p.m. Now, some of those could be weekends, so you just got to take that into consideration. Okay, it may or may not be, I don't know. Okay, so those are the next 1, 2, 3, 4 hourly cycles for the S&P 500. Okay, they're obviously, at this short of a time frame, they're subject to change, right? Let's go back here. I mean, the hourly looks pretty good. Look at this massive gap down. Look at that. Oh, my goodness. Bam! Whamskis. Yeah, I remember that. That was Sunday night. Okay. I mean, there's trading opportunities here. This market is so, oh my gosh. This really is a swing trader's, even day trader and swing trader's dream. This market is a swing trader and day trader, both. Both swing traders and day traders can make a lot of money in the market right now. Me, personally, I'm just trading short. I would just trade contracts, June contracts short. Of course, that's my opinion only, of course. And you need to watch your margin, and you need to understand your expiration dates if you're trading futures and you're trading options. You need to be aware, be smart, keep small positions, don't put your account in jeopardy. Have your stop losses there to get you out, and your trailing stops to lock in your bucks. That's the way I trade. Usually serves me well. All right, so that's it. Let's go look over at gold. I'm going to finish up with gold. I'm just going to look at the daily and hourly. By the way, in the S&P 500, you can trade the MES, even though most brokers are jacked up to initial margin all over the place. And on gold, you can also trade the MGC. Let's see, where is gold here? Look at ES, $16,600 on Ameritrade. Seriously? I mean, who puts out that kind of money for one contract? People are nuts, They're all about squashing a retailer trader. So it's all about keeping retail traders at bay. $1,600 because it's the 10th. I remember when this was like $600. I'm serious. I remember when this first came out, it was cheap. Now that's the problem. They put out these e-micros, give it a year or two, and they're just as high as every other product, and they wasted their time putting out these ridiculous products that they all know they're just going to jack it up anyway. So stupid. I wanted to look at gold. MGC, here it is. I think they jacked it up too. It used to be a little cheaper, but 726 is still fairly affordable. Okay, so there's your gold on your e-micros if you want to trade it. Okay. All right, so let's take a look. What do we got going on here? Let me switch over to the daily. And switch over to the daily, and let me get on the daily drawing set. Let's see if these still line up. Look pretty decent. Been waiting for gold to do its thing. It is really still pretty much on fire. I still do think it's going to come down, but my goodness, this MACD looks strong. And I'm sure there's a lot of investors and funds and hedge funds and block traders, whatever, a lot of them are a flight to safety on the gold. The gold is just absolutely ripping. But there are massive divergence warnings going on here, guys and gals. Just absolutely massive divergence warnings flaring up all over the place on gold. So be really careful. I do think gold's going to roll over at some point, but right now with the way the world is, I totally get it that gold could easily buck the trend. And I don't mean your typical trend. I mean buck even divergence warnings because the world is turned upside down. Upside down. Yeah. Okay. With fractures in nations all around the world, fractures showing up left and right in the United States for the last 3 years, 2-3 years. Since the pandemic and steal the election. That's right, I said it. I don't care if people don't agree with me. It's my video. I'll say what I damn well please. So I still think this trend is valid, though you could continue to get some very strong gold here. Okay, until it says otherwise, I definitely wouldn't trade it short because it looks like it's on a rocket ship. The next cycle low is March 13th, so that would be March 13th right there. And the one after that, April 24th, right there, okay? And if you want to know the next one, remember this is daily, June 5th. Okay, so those are the ones. Pause the video, take notes. Okay, of course I'll continue to put out the videos once a week. Okay, I'm just going to be tracking the S&P 500 gold, and occasionally I'll look at crude oil. There's no reason to look at crude oil right now. It's absolutely on fire. Let's look at the monthly. You can see I put in this wedge, which had totally violated and broke a breakout through the wedge. That is so cool. That's awesome. Totally awesome. I really don't. The monthly cycles on gold are really they're a little bit sketchy at best. They're not really dependable. So I'm not going to put a whole lot of credence into this October 31st thing out here. They're kind of there, and there are some decent. So that's loosely the next monthly cycle low. October 31st. But this gold had a breakout. Look at this, broke right through this triangle that was forming. It wasn't really a well-defined triangle because it kind of violated some rules, but it did have a touch there and a touch there, and it just broke out above it. Wow, look at that. What a beauty. That's a thing of beauty, guys. That's huge. Okay. Gold looks strong. It looks strong. There's nothing more to say about gold as far as it being anything other than strong. Let's look at the weekly. Let me change the drawing set to the weekly. You know, that weekly on gold, though, that's a little bit more prominent. So what does it show? April 17th and then August 21st. Gold is trading, even on the weekly, looks strong here. But I do see divergence warnings both on the daily and the weekly. And you can see on the Big Daddy right here, it's really important. I want you to pay attention to this. You can see the Big Daddy hardly ever has divergence warnings on the weekly chart for gold. But it happened back here, and sure enough, gold responded for 2 months, maybe a little longer, down. So just be aware, I'm seeing divergence warnings both on the daily and the weekly. So usually that means something, guys. So it's pulled away quite a ways from the 50-week moving average. So just keep an eye on gold. I'd be a little cautious. I mean, I know the way the world is, I could see why gold could go to all-time highs, easily could, but be careful because it's looking. There's a lot of warnings about gold trying to pull back. So you've got this strange world events going on that are pushing gold up, okay? But you got cycles and divergence warnings saying watch out. So you really got to watch it with gold. Okay, you have two things working in different directions. So right now, gold is strong. Looks like it's going to stay that way for a while. All right, I'll take a look at the hourly. We'll finish up this video. Let's see, do we have anything that's decent? Boom, bang, good there, not so good there. Yeah, pretty good right there, flattened out. Temporarily, looks like gold could, on the hourly, could come down into, what is that? March 2nd at 9:50. Well, that would be tonight. In about an hour, so I think that's it, guys. That's your low. Give or take a few hours on either side, but I don't think we're going to get much of a low here. Just flattened out and just came down, touched the 50 hour. We'll see if it does something below that. It could break below, but it might do that and then start going up off this next cycle. For those that want to know what's going on with the hourly cycles, 10:50 on March 3rd. March 6th, 11:15 p.m. Okay. March 8th, 12 midnight. Again, it's all Texas time. Again, pause the video, write down, take your notes for those cycles. The hourly cycles on gold lately are a little bit They're not quite as predictable because there's so much strength in gold right now. There was kind of a low right there. It came down into it in the middle of this cycle. Remember, this is hourly, so. Okay, I think that's it for now, guys and gals. Hope you enjoyed the video. Remember, I'm only giving content out to premium members. Nobody else is getting this content. Okay? Talk to y'all real soon again next time.